Morning, everybody, and welcome to this lecture on general ledgers. Okay, so this lecture is quite key in the whole process. General ledgers is, if you understand this, this is going to form the basis of everything going forward. Yeah, if you don't understand it, maybe watch this lecture 2 or 3 times to make sure that you do, because the rest of the lectures are not going to make a lot of sense if you do not understand this section. Okay, so let's get straight into it. I'm going to share a PowerPoint presentation. Okay, there we go. General ledgers. Okay, so this is your most important equation basically in accounting. So it reads assets equals equity plus liabilities. So basically what that means is any asset that you have comes from either equity or a liability. Now, equity basically refers to the profits that you've made up to this point. Liabilities means that you will in future have to pay someone back. So a quick example of that asset would, for instance, be a motor vehicle. Now, there's two ways that you can buy a motor vehicle. You can either buy it through money that you've made already, which means it's through equity, or you can buy it on a finance, which means it's liabilities. But basically, it comes down to your assets will always equal your equity plus your liabilities. So let's just have a look at the definition. So what's the definition of an asset? The definition of an asset is a future inflow of economic benefits. So what does that mean? That basically means any economic benefit that you will receive in future. So it means it's either it's something that you're going to receive in future. It's not necessarily always cash. It could be the use of an item, anything like that. But the asset is a future inflow of an economic benefit. And then if we move to the other side, a liability would be the direct opposite of that. So that is a future outflow of economic benefit. So what does that mean in normal terms? It means in future, I'm going to have to give something that I have to someone. It might be cash, it might be an asset, it might be that I've got to give someone my car. And then equity is the balancing figure between those two. Equity is basically your income and your expenses. So another way to look at it, assets and liabilities will tell us what's going to happen in future. Asset will, for instance, tell me I have a debtor. So in future, someone will pay me money. And the liability means I have a creditor. So in future, I will have to pay someone some money. Where equity basically looks at the past. Equity is your income and your expenses. So it basically tells us what has happened. Equity tells us what has happened up to today. What income have I generated? Which expenses have I incurred? And at that day, what is going to happen in future will be the assets and liabilities. Okay, so let's have a look at what types of accounts we see under those three headings. So let's firstly look at assets, our future inflow of economic benefit. So the first one there will be fixed assets. So why do we put that as asset? Because if I buy a car, I will not use that car only for today. I will in future also be able to use that car. And that's why we say I will receive a future economic benefit from buying a car. Okay, then the next one, positive bank account. So what we've always got to look at why a bank account is an asset is we've got to look at it from the point of view of the shareholder himself. So the shareholder, the day that he closes the business, he can take whatever's in the bank, withdraw it, and use it for himself. Then if we look at debtors, debtor means that someone will in future pay you money. Debtors are basically your clients that you've done work for. So a debtor is an asset because in future they will give you money. And then we've got a rental deposit. It's very important to note the rental deposit. Why is a rental deposit an asset? Because in future my landlord will give the money back to me. Whereas with your normal rent expense, once you've used that, then it's done for the month. You're never going to get the money back. Okay, then on liabilities, there we can see installment sales. So if you buy a vehicle in your business and you finance it through Westbank or MFC or one of those places, then they will be a liability because in future you will have to pay off that amount. Then also advocates and sheriffs. The moment an advocate does work for you, they will give you their invoice, and that invoice will in 90 days from today be payable. So in future there will be an outflow of economic benefits. Also credit cards, because credit cards you can swipe the card, but when month end comes you need to repay that amount. So credit cards would also be a liability. And then we've got VAT and PAYE, because like we explained in the first lecture, the moment we've got we registered for VAT, we need to, by the last day of the month after my cycle ends, we need to make our VAT payment, and by the 7th of the month following the month where we are, I need to make PAYE payments. So that's why they are scheduled or listed as liability. Other one that we can also add there is a negative bank account. If our normal business bank account is in overdraft, that would also be a liability, because if I was to close the business today, the shareholder would have to put the money in from his personal pocket to cover that overdraft before the bank will allow you to close the business. Okay, and then under equity, we've got income and our expenses. So the way that I normally explain it to people will be income is when you can keep the money, and expenses is when you give someone money and they are not going to give it back. We'll do an example of that just now. Okay, so what does a T account look like? Now, these T accounts are key for the assignments, as this is the format in which most answers will be. So we've got a T account. That T account has to have a ledger name. Now that ledger name, there's no set list, although there's a more or less default list of the types of ledgers that you can have. There's no set wording of what is correct and what is not correct. The criteria for a ledger name is basically that the reader of your financial statements must be able to determine the nature of this T account by reading that ledger name. So if you call it printing and stationery, that is a relatively good description of what the types of transactions will go in there. If you call that a general expense, that's not a good name, because anything can pretty much go in there. So you want to try and be as specific as you can when determining your ledger names. Okay, and then your ledger will always have two sides. It will have a left side, which in accounting terms we call the debit side, and it will have a right-hand side, which in accounting terms we call the credit side. That will always be the same. A debit side will be the left, the credit side will be the right. Okay, now if we go back to our equation and we plot our equation against the debit and the credit side, it's very important. This is pretty much going to form the basis of any type of ledger question that you're going to answer. So assets will increase on the debit side and it will decrease on the credit side. Then if we move over the equal sign, we will find equity and liabilities. Now there it changes around. Equity would decrease on the debit side and increase on the credit side, whereas a liability will decrease on the debit side and increase on the credit side. So let's just have a look. I've set some example questions here, or just a few things to discuss, and plotted against that just to explain to you what we do. Now let's say we purchase a vehicle. That would mean I will have a T account for motor vehicles, and there's now an extra vehicle in my driveway. So my vehicles would have increased. Now, there must always be a debit and a credit leg to the same value for each and every transaction in the whole world. So if I buy a motor vehicle for 100,000 Rand, it means I now need a credit transaction. Now, it's very important to note your credit transaction is not necessarily, it's not to say that it must be on the other side of the equal sign, that it's either there or there. It means it's got to be on the credit side. So it can also be under the asset section as a negative. We'll look at that now. So if I buy a motor vehicle, if we finance it, what is the other thing that happens? One, there's now a new motor vehicle in my driveway, but also I owe Westbank 100,000 Rand. So I will have a liability that increased by 100,000 Rand. So my debit 100K, credit 100K, my equation balances. What happens if I have the money in the bank for that vehicle and I now purchase it in cash? I will still have motor vehicle T account, which increases by 100,000 Rand, but I will have a second T account under assets, which is called business bank, and my credit will go against the business bank because my business bank account has now decreased to give me the motor vehicles which have increased. Okay, let's look at a fee. If a client pays a fee, what will happen? You will have a asset T account, which is the bank. If clients pay money into your business bank, then your business bank will increase. So let's say 10,000 Rand. So your business bank will increase by 10,000 Rand. Now we need to have a credit. So now we ask ourselves, will I have to give the money back in future? And the answer, if the answer to that is yes, then you will raise a liability. But the moment if you do work for a client and they settle your fee, then you will not have to give that money back. So then we have generated equity. So then the credit leg will open a T account called fee income, and the credit leg of that transaction will go under your fee income account because we will not give the money back. So we get the money, it increases my business bank, and then we don't have to give the money back. So we have generated income, we have increased our equity. Okay, let's look at rent. Let's look at rent and rent deposit correctly or combined. So if I pay an amount to my landlord, we all agree that will decrease my bank account asset. So the first leg will be a credit as my bank account will decrease. Will the landlord give my normal monthly rent back to me? The answer is definitely no. Once I've paid it to him, he will not give it back. So now if I decrease my asset, then I've also decreased my equity because I've now given out money which I will never again be able to get back in future. But what happens on the rental deposit? On the deposit, it will also decrease my asset because my bank account decreases. But then on the debit side of the transaction, I haven't lost that money because I'm going to get it back in future. So therefore, I can create a rental deposit T account under assets, and I can enter that on the debit side because my future receivable, the monies that I will receive in future, has increased. So that will be a negative asset under the bank T account and a positive entry on the rental deposit. Okay, so let's look at an example. Someone pays money into your bank. If you can keep it, this is pretty much what I've just said. If you can keep it, then my bank, which is an asset, will increase, line A, and fees, which is equity, will also increase because I can now keep that money. But if you have to repay the money, you will have a bank asset, but if I have to repay it, I will create a liability for a business creditor. Okay, so now we understand the whole concept of ledger accounts, assets, equity, and liabilities. Now, I asked the question, what changes when we move to the trust side? So have a think about that quickly. What will happen when we move to our trust set of accounts? Do we have trust assets? Do we have trust liabilities? And do we have trust equity? And the answer is pretty much that. The equity leg falls away. I can never have fees or expenses in my trust account. I can simply have assets, which is my normal bank account, plus my investment accounts, plus any cash that I have holding on behalf of clients, which is my assets, and your liabilities will pretty much be a list of clients whose money you hold. And those two must always equal each other. The moment they don't, then you either have a trust surplus or a trust shortfall. Now, a trust shortfall is obviously a massive problem because that means you've utilized your client's funds and you don't have it anymore, so you won't be able to cover your trust liabilities if you need to pay out everyone. A lot of people believe that it is actually a good thing to have a trust surplus, to tell the Law Society and show them that they are really conservative and they have more money in trust than what they have creditors or that what they have liabilities for. Now that's also actually incorrect. The Law Society, the LPC rules state very clearly that your trust assets must equal your liabilities. So if you fill in your attorney's annual statement and you show a surplus on your attorney's annual statement, the Law Society, the LPC, sorry, I'm still getting used to this LPC thing, although it's been in practice for a few years. The LPC will most probably come and investigate to determine why you have a trust surplus, because their rules pretty much state that the moment you are allowed or you have done the work, you must transfer the fees. It's not that you can if you want. The moment you've done the work, you must transfer the fees to business. Okay, so when analyzing T accounts, so if we've already done T accounts, then the T account will have either a balance on the debit side or it will have a closing balance on the credit side. In other words, if I add all the transactions on the left, add all the transactions on the right, the one side will be bigger than the other, which means that will be the balance of my T account. So if I have a debit balance, then it is definitely either an asset or an expense. So that means in either I will in future receive money from or economic benefits, or it's an expense account. If I'm never going to get the money back, it's an expense. On the credit side, we've got liability and income. So on the credit side, if I have to pay back money in future, it's a liability. If I can keep it, then it's income. So just keep that little table in mind when we analyze our accounts after we've done them. Okay, so for every transaction, so we're going to do a few transactions as an example now. For every transaction, follow these questions. First one, you've got to ask yourself, is this a trust or a business transaction? In other words, are we going to work in our trust set of books or we're going to account for it in our business set of books. Then next, we've got to ask ourselves, is there a flow of cash or not? Does it touch my bank account, the transaction? If it does, then we know we can write the one leg of the transaction into our cash book. If there is no flow of cash, then it means we have to do a journal. A journal is the supporting or the primary ledger for a non-cash transaction. So that will make a bit more sense when we get to the example now. Okay, and then we've got to decide which T account do we debit and which T account do we credit. Okay, so then I've just got an example here to say, what does a complete T account look like? When you answer your assignment questions, it's very important that you do use the T accounts in the way that it should be. So it has to firstly have a date. Then we must have a description so that when we read through our business bank T account, we can see the description there. Normally we can give all the transactions a number, so we can say this is business receipt number 1, and we can cross-reference that to the ledger that we posting. And the amount. So you'll see all of the transactions. This is just the example of a little T account that I copy and pasted. So it's got a date, it's got a description, the transactions have a number, and we've got amounts. Now in this case, you'll see we've got a receipt of 50,000 and we pay out 2,000. So just ignore that line for the moment. So if I got 50,000 and I pay out 2,000, how much do I actually have in the bank? The answer is 48,000. So what you'll do is you'll have a transaction there to say that we're going to add 48,000 to the credit side as my business brought forward, so that my debit side and my credit side total the same values. And then I'm going to take that amount that I used to balance the T account and carry it forward. So in layman's terms, if last month I received 50,000 and I paid out 2,000, what would the opening balance in my bank be going into this month? And the answer would be the 48. So this balance carried forward will be where I carry my bank statement balance from the previous month into this month. And when I then draft my trial balance as at the end of, in this case, July 2016, then that amount of the 48,000 will be included in my trial balance. I just make a note, when answering assignment questions, they want you, and you will specifically see it when we get to the assignment read-throughs, but they don't want you to enter a description here. They want you to enter the name of the contra account that you are posting it to. I just want to put that little disclaimer in there so that you know in practice we write the actual descriptions of what it was for. For assignment purposes, they want the name of the contra account that you are posting to. So in our example, we'll do it in that manner. We'll do it in the same manner as what they require when completing assignments. Okay, so that is the end of the slideshow. So now I'm going to just quickly stop sharing that. And I'm going to share an Excel workbook with you guys, which is a quick little example that we are going to do to work through a few transactions and see what the process is of completing them into ledger accounts. Right, so general ledger questions, and I say except that at the time of doing this question, the VAT rate is 15%, although you'll see that the dates relate to a much older period. Yeah, let's use 15% so that we stick to the current VAT rate. Right, so now I'm telling you on the business side, the first transaction that we're going to do. On the 1st of June, you deposit 100,000 Rand to the business as a loan. It should actually be you. Right. On the 1st of June, you deposit 100,000 Rand to the business account as a loan. So let's go through the questions that we just read in the slideshow, or that we just went through. So my first question that I've got to ask myself is, will this relate to trust? So what I've done is I've got a data sheet down here for trust transactions. I've already added the descriptions just to make it a little easier to go through the lecture. And I've got a business set of accounts. Right. So let's look at that first line there. If I, as the shareholder, deposit money into the business, is that a business transaction or a trust transaction? And now, hopefully, most of you guys will say that is business. So now we click on business. Now we've got to ask ourselves, is it a cash transaction, which means we'll account for it in our business cash book, or is it a non-cash transaction, which means we have to do a journal entry? Now, most of you guys will hopefully say that it is a cash transaction. So we know we're working in the cash book. Now we've got to ask ourselves, did our cash book balance increase or did it decrease? If it increases, my cash book is an asset. So if it increases, it means we have to write the entry on the debit side. So there we see shareholder loan. So you will note the description here. So I've got a date. The description that I use here is the name of the T account where I am going to post this to. So we can enter that we've got 100,000 Rand. And then I've already set up a little Excel formula just to keep a running balance of the bank. So now I've entered the debit leg of my transaction. Now I need to go and enter a credit transaction to the same value. So what am I going to credit? What's the two things that happen? One, so let's look at me as the business. One, there's money in my bank account, but two, I owe that money to the shareholder. So I need to go and create a liability for the shareholder to show that I owe him money. So I'm going to create a T account called shareholder loan, and on the credit side, I will enter 100,000 Rand to make sure that my transaction balances. Now my description on the shareholder loan is business cash book, BCB, so that I can see that is where the transaction was, or where the contra line for this transaction is. Okay, so that's simple enough. Let's move on to the next one. On the 5th of June 2000, you purchase a PC of 30,000 Rand inclusive of VAT. So now VAT comes into play. Okay, so let's stick to the questions or stick to the steps. So the first step is this a trust or a business transaction? So this doesn't relate to a client, so it's definitely not a trust transaction. So we move to the business leg. Now we ask ourselves, is this transaction a cash transaction or not? So yes, because we purchased it. So we went into the shop, we swiped the business card and we took the PC. So would that increase or decrease my cash book? The answer is it will decrease my cash book balance there. Now we've got to start checking with the VAT. So we said the amount is 30,000 Rand inclusive of VAT. So which amount always goes into the bank account, in or out of the bank account? And the answer is the inclusive amount. So the 30,000 Rand will be the credit in my bank account. Okay, now we've got to go and do the debit leg of this transaction. But now there's two things that happen. So my debit leg will be a split transaction. First part of the leg will go to computer equipment because I now physically have an extra PC in my office. But the second leg is I can now claim VAT on this purchase. So I need to reflect that. So now if you go, or if you remember the VAT, that little legend that I gave you guys in the introduction. So if I have the inclusive amount, which amount will go to my computer equipment? And the answer is the exclusive amount. So to calculate the exclusive amount, if I have the inclusive amount, we can say 30,000 Rand divided by 1.15. Okay. 26,085.96 is the value of my computer equipment. Okay, and then where does the VAT go? Remember, this is money that I give out. So on my VAT control, it will be a debit. Because I gave money out for the business, SARS will give me the VAT back. So we are creating an asset, a VAT asset, because of this. SARS will give me this VAT back. So there's two ways to calculate it. If you've got a calculator, the simple way is to just say, well, my inclusive amount less my exclusive amount has to be the VAT. So 3913.04. Or if you look at that legend of mine, you can say the inclusive amount times 15 divided by 115, and that will give you exactly the same amount. So whichever is easier, both methods will get you to exactly the same transaction. So just to recap the transaction, I paid money, I paid for the physical PC, so I physically paid for the PC, so it will credit my business bank account, and two things will happen. One, I can claim the VAT, and secondly, I now have a computer. So if you add those two, make sure that gets to 30,000 Rand, and my credits and my debits agree. Let's move on to the next one. On the 15th of June 2000, you find offices and pay the following to the landlord. You pay your first month's rent of 12,000 Rand, exclusive of VAT. So for purposes of this exercise, let's accept that our landlord is VAT registered, so we are allowed to claim VAT on the rent that we pay to him. And then we have a rental deposit. So normally a deposit won't carry VAT because there is no service rendered. He simply leaves it in his bank account for in case you don't pay your rent one day. If that happens and he uses that money to settle your rent, then you will be allowed to claim the VAT. But as long as it's a deposit, VAT is not applicable to deposits. So let's first do the one where we say the first month's rent of 12,000 Rand. So hopefully we'll all agree it's a business transaction. So what I've done is I've split it up into two separate transactions. So one for the rent expense, one for the rent deposit. Now, which amount will flow out of my business bank account? 12,000, or do I need to add VAT on top of that? So what did we say when we did the computer example? We said that the amount that goes out of your business bank will always be the VAT inclusive amount. So that means it will be 12,000 Rand times 1.15, because I've got exclusive. So to get inclusive, I times by 1.15. So that means I have a cash outflow of 13,800. So now I need to go and account for that. That's my credit entry. What will the debit entry be? Debit entry will be I have now incurred an expense. So it means my equity has decreased because I've given that money to the landlord. He will never give it back to me in future. It's now gone. So to get the ex-VAT amount, I will take that and say divide by 1.15, and that will be 12,000 as the example said. And what happens to the difference? So I've got a credit of 13,800, I've got a debit of 12,000, so it means I'm short a debit on the VAT to make this balance. So I will simply say it's my inclusive amount less my exclusive amount, I can now get SARS will of my VAT that or of my rent that I've paid, SARS will give me 1,800 Rand back. Okay, now let's look at the rental deposit. So the rental deposit we said is 12,000 Rand. It equals 1 month's rent, but it does not attract VAT. So how much money will flow out of my business cash book? And the answer is 12,000 Rand. So I have a credit, so now I need a debit. What will we call the debit? Rental deposit, and that's an asset. Why is it an asset? Because in future, my landlord will give me 12,000 Rand back. So in future, I will receive on the debit side of my business bank 12,000 Rand. Right. That covers all the transactions under the business leg of this little example. Okay, now we're going to start to work with matters. So the first one that we have is matter LIT11. So first transaction that we have there is we say on the 3rd of June 2000, you raise a first consultation fee of 1,500 Rand exclusive of VAT. Right. Now, the first question that you have to ask yourself, is this a business or a trust transaction? And remember, trust bank transactions relates to cash flow transactions where money flows in and out of your trust bank account. So from what we read in that first line, does it say anything about money is in or out of the trust account? The answer is no. So it means it has to be a business transaction. Now in the business transaction, this says you raise a first consultation fee for 1,500 Rand. Does it say that your client have paid you for that? It says the answer is no. It doesn't work. It would have been great in real life if the moment I raise a fee, the money magically appears in my business bank account. But sadly, that is not the case. What is the case is I have to do a journal entry because there's no cash flow yet for that transaction, but there is a transaction because I've done the work. So I need to show that I've done work. I need to raise the fee, and I need to show that my client owes me the money for that fee. Now, on journal entries, I find it so what the accounting process normally is you will go and draft your journal on the left-hand side and, well, your journal in your primary ledger, and then you will go and post this journal into all of the different little T accounts that is affected by it. But I find it difficult to remember which legs should be debited and which legs should be credited. Now, when I say I find, that's not necessarily me. I do this for a living, so I will be able to do that. For you guys who don't necessarily work with this every day, I find it easier to go and analyze the transaction in my ledger accounts firstly, and from those ledger accounts, go back and draft my journal so that I can still get marks for the journals. Right. So I'm going to follow that little cheat method when doing this. So let's start and see what's the two legs of the transaction. So the moment I raise a fee, what has happened? First thing is my client owes me the money. The second thing is I've generated equity through the fact that I've done work. Now, how do we create, or how do we show that the client owes us money? For each client, he will have a business ledger, and he will also have a trust ledger under the trust tab. So now on the business ledger, because remember this is a business transaction where we generate the fee. Now we have to show that he owes me the money. So if someone owes you money, will that be an asset or a liability? And the answer is it's an asset, because in future you will receive this money from the client. You will receive an economic benefit. So to generate asset, we have to put a transaction on the debit side under this client's ledger. Now the question is, what amount do we put there? Do we put the 1,500, which is exclusive of VAT, or does my client have to pay me my fee plus VAT on top of my fee? And the answer is your client will owe you the inclusive of VAT amount. So to get the amount for my debit entry there, I have to say 1,500 Rand times 1.15. I'm going to debit my client with 1,725 Rand. Okay, so now I need to have two credit entries to equal that value there. So how much of the fee will actually go to the business? The answer is the exclusive amount. Why? Because the difference between the two, your inclusive and your exclusive amount, is SARS. So we have to show a liability towards SARS for the VAT portion, and I can then keep the exclusive of VAT amount. So my equity amount, or my professional fee, will simply be that divided by 1.15. So my fee is 1,500 Rand. If we go back to the data tab, it said there, my fee is 1,500 Rand exclusive of VAT. So I've now shown that my fee, my portion that I get, is 1,500. But to get that, my client needs to pay me 1,725, and the difference we have to show as a liability. So do you see, now it's a credit on the VAT control because that money must go to SARS. So if I say inclusive, let's exclusive. So 225 goes to SARS. If I add my credit legs together, it gives me 1,725. So my debits equal my credits on this transaction, and I'm happy it is now done. Right, next one. On the 15th of June 2000, the client settles his account into your trust bank. So that means you now generated an invoice based on the fee that we wrote into the ledger. You send that invoice to the client, and now on the 15th of June, he pays that amount into your trust bank. Okay, just as a little pointer, could he have paid that into your business bank account? The answer is yes, because you've already done the work, so there's no problem for that client to pay that money directly into your business bank account. So, settles his account into your trust. So let's ask ourselves, go through the questions. Is this a trust or a business transaction? And the answer is trust. So I'm moving to this tab here. Is there a flow of cash? And the answer is yes. I said the client pays the money into my trust bank. So what will happen to my trust bank? Will it increase or decrease? The answer is it will increase. Where does a bank account increase? On the debit side. What amount will the client pay into my trust bank? The exclusive or the inclusive amount? And the answer is the inclusive amount. So you will pay 1,725 into my trust cash book. Now I've got a debit. What must I go and credit? And the answer is my client's ledger, but his trust ledger. So 1,725. Do you see my cross-reference there? I say client LIT11, and in client LIT11, I reference it back to my trust cash book. Now, when answering questions about this, it's very important that you separate. You have two separate T accounts for client LIT1 trust and a separate one for client LIT1 business. There's a lot of guys that answer these things correct, these questions correct, but then they don't split between the client's trust account and the client's ledger account, and then sadly no marks can be awarded. So that is very important. Right, so simple, money comes in, we allocate it to our client. Now we read the next line. On the 20th of June, you do a trust to business transfer for the available amount. So let's first discuss what is the available amount. The available amount is always the lower of what a client has in trust or what he owes you in business. So let's just think about that logically. You can never do a trust to business transfer for more than what the client has in his trust account. And we can never transfer more to business than the value of the work that we've done. So it will always be the lower of. So let's go and see. So in trust, I have a value of 1725. In business, I have a value of 1725. So what's the lower of the two? They're exactly the same. So I will do a trust to business transfer to the value of 1725. Now, how do we go about doing this trust to business transfer? So there's two legs to a trust to business transfer. There's the value step and cash step, the value leg and the cash leg. So the value leg is where I go and I set off my client's trust account against his business account. So for that, we've got to do what we call a transfer journal. So we've got to take the money from his trust and transfer it to his business ledger. And then the second leg of that transaction is where we physically move the money. That's the fun thing to do, where you go into your internet banking and you move money from your trust account into your business account, and you can go and utilize it for whatever you want. Right, so to get the money out of trust, what do I need to do? How do I get rid of this credit? And the answer is I go and I write a debit transaction of 1725. If I have a debit in trust, remember, a transfer journal is the only journal that can move between your trust sheet and your business sheet. So I've got a debit there. On the business side, I'm going to have a credit of 1725. So now if I read through this ledger, what does it tell me? It tells me the client paid that, I moved it to business, he's got no money left in trust. Is that correct? Yes. In business, you owed me that, you've now settled that, you don't owe me any money. So that's the first leg of the transaction. Then very important, and I see I actually forgot that on our first journal that we did there, so we'll come back and do that just now. But now from this, remember, this is my cheat line. So now I've got to go and do the actual journal after I've done the cheat. So your transfer journal will always show on your trust ledgers, and there I see my journal, which I've already accounted for there. So now we physically just go and say, okay, what did we debit? We debited client LIT1 trust with 175. What did we credit? We credited client LIT1 business with 1725. I'm just going to quickly backtrack to the fee that we did, the fee on this. So I actually forgot to go back and do the journal. So to go back and do the journal, I've simply got to ask myself, what did I debit? I debited client LIT1. So client LIT1 with 1725. What did I credit? I credited my professional fees with an amount of 1,500. And what do I need to balance? The VAT. I credited my VAT control with 225. Add those two together, you can see my journal balances. So yeah, that's the main thing. Remember to go back after you've done your cheat in the ledgers, to go back and do the actual journal, which I now forgot. Right, so that concludes matter LIT1. We raised the fee, the client settled the fee, and we did it's not actually done because I have not yet gone and transfer the money from trust into business. So I've done the journal, the value step where I set off the client's trust account against his business account, but now I need to go and transfer the money. So if I go into my internet banking and I pay it out of my trust, will that increase or decrease my trust? The answer is that will decrease. So I'm going to have a credit entry there, reference to my business bank. And in my business bank, I'm going to have a debit entry of 1725, and my reference is my trust bank. So only now have I done that. So remember to do both steps. You can now do 1 million of these every day, and you can see how easily it is to forget one of the legs. So make sure you double check to make sure that you balance your debits and your credits, and that you do account for all the legs of the transactions. Right. Now we move to the next matter, which is a correspondent matter, and this matter reference is COR11. Okay, so the first transaction. On the 4th of June, you receive an instruction from lead attorneys to recover debt of 400,000 Rand from Tsotsi Pty Limited. Okay, so let's firstly remember, if we do a correspondent transaction, who is my client? My client is the instructing attorney. So I need to open up a business ledger and a trust ledger for lead attorneys. They are my client. Their client is not my client, nor is Tsotsi Pty Limited my client. So all the transactions that relate to this matter, COR11, will be opened under lead attorneys with file reference COR11. Okay, so on the first one, it says on the 4th of June, you receive an instruction from lead attorneys to recover debt of 400,000. Is there a transaction there? The answer is no. It simply tells me what gives me information about the case, but there's nothing to account for there. I haven't yet recovered that debt, so there's no transaction there. Then it says your agreement with lead attorneys is a 70-30 fee share plus 10% collection commission, and I said no cap, just for purposes. In real life, there's I think 1,000 Rand cap on that. So for purposes of our assignment, there will be no cap on the 10% collection commission. Then I want you to note it's a 70-30 fee split. So when we work out the portion that must go to lead attorneys, it's not whatever the fees divide by 3, because that would be 33%. It's 30%. So to calculate their portion, I have to times my fees by 30%, or the simple answer, or the quick way to do it, is to times by 0.3 all of your transactions. Okay, now we start. On the 6th of June, you write a letter of demand for 5,000 Rand exclusive of VAT. So what does this mean? This means I have now generated a fee. Where do we account for fees? In trust or business? Answer is in business. And is there a flow of cash? At this point, no. It doesn't say they pay us for the letter of demand issued. It simply says we've done the letter of demand. We can now generate a fee to that value. So let's go to business, and I'm going to run the little cheat method again, and hopefully this time remember to go back and do my journal. So we open up lead attorneys at a COR11, and this is their business ledger. So I said the fee is 5,000 Rand exclusive of VAT. So how much do they owe me? How much will they have to pay me for this? And the answer is 5,000 Rand times 1.15. So the answer is 5750. owe. They will owe me the VAT on top of that amount. Okay. Now that's the debit leg of my transaction. So where do we post the credit? Firstly, part of the transaction goes to fees because I've actually done the work. What is the fee portion? The equity portion will be your fee exclusive of VAT. So divide by 1.15. So my professional fee is 5,000 Rand. Now is my journal in balance? And the answer is no. I need to account for the VAT of 750. So this is on fees. So on fees, I will have to pay the VAT over to SARS. So it's a VAT liability, and the total of my VAT liability is my inclusive amount less my exclusive amount, 750 Rand. So let's first go and do this, or account for this in the journal before we go on. So what did I do? I debited client COR11 with 5750. So I'm going to put that there. How much was my fee? That was a credit of 5,000 Rand, and I raised VAT of 750 as a credit. You see, so now it's very easy to go and do the journal. If we didn't use the T accounts to figure it out, then it would be quite difficult in your head to just work out how much to debit and how much to credit. Okay, right, but now there's a very important second step to this, because of this fee that I've generated, a portion must now be allocated to lead attorneys for their fee split. So how do we account for that? So basically I said, you lead attorneys on the business side owe me 5750 because I've done that. But they don't actually owe me that. They only owe me 70% of that, because 30% is the allowance that I've allocated to them. So I need to now reflect that you owe me 30% less. So how do we show that? We're going to raise a credit entry on their business ledger to say that you owe me 5750 times 0.3. So I'm going to credit their ledger by 1725. So by 30% less you now owe me. So they actually owe me, just a normal formula there, that less that. So they only owe me 4025 for this transaction inclusive of that. Right, so now the whole thing literally just goes into reverse. So now I can simply go and say, okay, but if you owe me that much less, it means the value of my fee is not 5,000 Rand. It is 5,000 Rand less 30%. Or you can go and say my debit entry is my credit exclusive of that. So divide by 1.15. So you see, the value of my fee is only actually 3.5, because although it's worth 5,000, I must give 30% to lead attorneys. And now again, I've got a missing leg. I've got a credit of 1725. I've got a debit of 15. So it means I need to account for the VAT, because now I'm telling SARS, but listen guys, I'm not going to pay you 750 because I didn't make 5K. I'll pay you 750 less the difference between my inclusive amount and my exclusive amount. So I'll owe you 750 less the VAT on my agent's allowance. Right, so that one is a bit of a mouthful. Plus now we must remember to go back and do my journal. So what did we do? We credited COR11's business ledger. So we credited that with 1725. We debited our professional fees because our equity has decreased by the value of the agent's allowance, and the difference between the two is the VAT. Okay, I think this was quite a mouthful. I think at this point you go back, rewind the slides back to this transaction, and maybe just have a read through it again and make sure that you understand it's actually very simple. It's a normal fee, and for the agent's allowance portion, it's literally all the journals just exactly in reverse at 30% of the value of which you would have originally posted. So it looks difficult, but as long as you stick to the formula, it's actually very, very simple to do. There is another one coming up for the collection commission portion of this, so there will be another example of this just now. Okay, so let's go to the data sheet. Now we say on the 8th of June, you pay the sheriff 3,000 Rand from the business account. So that we say is not applicable to this. Now, will this be a trust or a business transaction? The answer is business, because it says so. Will there be a flow of cash? The answer is definitely yes. So my business bank account will decrease by 3,000 Rand. Which side does it decrease? Decreases on the credit side. So 3,000 Rand flows. Now, is that sheriff's account for my account or for my client's account? And the answer is I want to recover that money from my client. I want to tell them that they owe me that money. So I'm going to enter the debit leg onto their ledger. So from my business cash book, I'm going to debit them by 3,000 Rand to say that you owe me my work that I've done plus VAT, less your allowance, but you're going to pay me the full amount of my disbursements. If there's money that I have to spend on the file, then agent's allowance is not applicable to disbursements. So if there's monies that I don't have to, or if there's monies that I pay on behalf of this matter, I will recover the full amount. So I'm not going to have a credit entry for that to say, no, but you can leave 30% of that for you. I want to recover the full amount of the monies that I spend to get this matter sorted out. Okay, so that's simple. It goes out of my bank and I debit my client's business ledger to show that you owe me the money. Then on the 10th of June, Tsotsi Pty Limited pays the capital amount into your trust bank account. And I said there, remember collection commission. So now let's first account for the capital coming into the trust bank. So trust or business, trust. Will it increase or decrease my cash book? The answer is it will increase. It's money coming in. So on the debit side, I have a transaction for 400,000 Rand. Now, what will I credit? Very simple. I will open up a trust ledger account for lead attorneys. Remember, not Tsotsi, not whoever leads client is lead attorneys, because they are the guys I'm dealing with. And I will allocate this credit to ATM. So very simple. Money comes into the bank, debit my cash book, and I credit my client's trust ledger to show that I'm holding these monies on their behalf. Then on the 15th of June, you transfer, you see, one step back. Remember collection commission. I already forgot that. Okay, right. So collection commission is 10% of the amount received with no cap. Okay, so how much will my collection commission be, the excluding VAT, my part that I get? And the answer is 40,000 Rand, 400,000 times 10%. So my fee, so I'm going to go to the fee side. So there's no real correct place to start. Start with whatever leg of the transaction you understand best. So whether you start on your business ledger or on your fees or whatever, it doesn't make a difference. But in this case, I'm going to say my fee that I'm going to get is 400,000 times 0.1, 10%. So my fee that I'm getting for this transaction is 40,000 Rand. For me to be able to get that fee, I need to invoice you, which is my client, 40,000 Rand plus the VAT. I'm going to add VAT on top of the 40. So I need to invoice you for 46,000 so that I can get 40,000 and the balance I have to pay to SARS. I've got a debit of 46 and a credit of 40, so I need a credit of 6 to make this transaction balance. So I've got a VAT I've incurred a VAT liability of 6,000 Rand. Okay, so hopefully you understand that. So 400,000 came in. I take 10% as my collection commission. I invoice you for the VAT inclusive amount, and the balance goes to SARS. But now there's another leg to this transaction, because lead attorneys will be allowed 30% of the fees that I generate. And this counts as a fee because it's not a disbursement, it's a fee. So I now need to show lead attorneys, but I'll decrease your account by 30%, so times 0.3. So you can keep of the 46,000 that you owe me, 13,800. So what will happen? My fees, I'm not getting 40,000 Rand for this transaction. I'm getting 40,000 Rand less 30% of, less, if we do it, let's rather do it this way, it's easier, times 0.3. So 40,000 less 12 of actual fees I'm going to have to give to you. But now my entry is unbalanced because I've got a credit of 13,800 and a debit of 12. So I need a debit entry in my VAT. So I'm telling SARS I'm not going to pay you 6 because I didn't get the full fee. I'm going to pay you less by 1,800 because 1,800 is the VAT on the agent's allowance, which I'm not going to get. Okay, so now lastly, we've got to go and do our journal. So what did we do? We debited our client COR11 with 46,000. Okay. We credited our VAT control with 6,000. We're telling SARS you can take 6 of that, and I'm keeping 40 for me. But now we need to reverse. So do you see here where it was debit, credit, credit? There. Now it simply goes credit, debit, debit. So it's the exact reverse of that. And I can actually, to make it easy, you can run a formula here and say 46,000 times 0.3 and just copy that all the way through and you'll see it will work out. It's exactly 30% of all of those amounts. So I tell my corresponding attorney, you owe me 13,800 less. SARS, you're getting 1,800 less. And my fee is not the full 40, it's less than that. So I'm actually only taking 28K as collection commission on this matter. Okay, so it's a mouthful. Yeah, make sure you get all the steps when having to capture correspondent transactions. You've got to keep a straight head on you. Okay, so let's just see, did we do everything now? On the 10th of June, Toti pays the capital into your trust. Yes, that was the 400K. We put it in our trust. We put it in our client's trust ledger. Then there was the collection commission. Yes, we raised a fee for our portion of the collection commission. And we remembered to decrease our fee by 30% for our share that goes to, or our agent's allowance that goes to lead attorneys. Now, on the 15th of June, you transfer to business and pay the balance to the client. So now I can go and do a trust to business transfer, and then whatever is left in the trust after I've done the trust to business transfer, we must pay over to our client. Right, so now we first got to calculate how much can we transfer. So let's see, on lead attorney COR11, they have 400,000 Rand in trust. On the business side, let's see how much do they owe us. Let's just run a little formula here to say, okay, my debit side is that amount, sum of that, but we've given you allowances of those two amounts. So how much do you actually owe us? If we take our debit less our credit, So you owe us 39,225 after we've given you your allowances. So which one's smaller, 39,225 or 400k? Obviously the 39. So the amount that I've got available for trust to business transfer is 39,225. So now let's remember there's two steps to a trust to business transfer, the value step and the cash step. So what is the value step? The value step is where I go and I say, okay, I'm going to take 39,225 of your 400k. So I'm going to decrease your 400k by 39,225. That's the debit. And where does that debit go? That goes to my client's business ledger, 39,225. So now this matter should be at 0. Let's check if I sum that and I sum that. Yes, 54,750. Great. So now my client does not owe me anything in business, and I've decreased the trust balance by the amount of the work that I've done. Now, second step, let's not forget, now we must actually log into our internet bank. Will this transaction increase or decrease my trust bank balance? The answer is it will decrease. So my trust cash book will decrease. It will have a credit entry of 39,225. And where does that go? That goes into my business cash book. So 39,225 as a debit, because my debit cash, my business cash book, which is an asset, will increase by that amount. And now we've got to remember to go and do our actual journal. So remember, a transfer journal reflects under the trust tab. So what did we do? We debited our client COR11 his trust ledger with 39,225. And what did we credit? We credited his business ledger with 39,225. Right. So let's go back to our data. It says on the 15th of June, you transfer to business. So that we've done. We've set off the client's trust balance against his business balance, and we physically moved the money to the business account. It says, and pay the balance to client. So that part we must still do, because he now wants to get his money for this. Now, remember where we're paying this to? We're going to pay this over to lead attorneys, the capital amount. So how much do we have left on trust that we can pay out? It's 400,000 less 39,225. So 367.75 is how much I can pay out. So if I pay that out, it will decrease my trust cash book by 360,775, and my debits and my credit matches those two amounts. Right. So now we have completely accounted for our correspondent matter. Okay, now we get to the conveyancing matter, CON11, and our purchase price is 2 million rand. Okay, so this might look like a mouthful. Very important, just do the transactions one by one, and remember to count for everything as you go along. Okay, so first step. On the 3rd of June, Mr. Buyer deposits 300,000 into your trust account. Let's first stop there and do only that. Business or trust, it says trust, so it should be there. So on the 3rd of June, Mr. Buyer, if he pays it in, it will increase our trust cash book. So 300,000 Rand. Where do we go with the credit? Whose money is that? That is Mr. Buyer's money. So I'm going to credit his T account, his trust ledger, 300,000 Rand, and TCB. You can, if you want, in the assignment or wherever, you can always put a little description next to TCB, just to kind of keep yourself and the marker in line with what the transactions are actually for. although the actual marks will be allocated for that part there, where you reference it to this, and there you've got to reference it to Mr. Buyer and his trust ledger. It's very important that you put the T there to show that this goes to his trust ledger. Okay, so on the 3rd of June, Mr. Buyer deposits 300k into your trust that we've accounted for. We brought it into our bank and we allocated it to his ledger. And now it says you invest these funds in a section 86(4) account. Now, how do we do that? That means we now have to go and physically open another bank account under section 86(4), and we've got to move the funds there. So if I move funds from my trust bank account to his investment account, will that increase or decrease my trust cash book? And the answer is it will decrease my trust cash book with 300,000 Rand. So if that's the credit, where's the debit? The debit is section 86(4), 300,000 Rand. What did I not touch at this point? I haven't touched his trust ledger. Why? This trust ledger explains what my liability is towards Mr. Buyer. So at this point, my liability to him is 300,000 Rand. Has that liability changed because I invested these funds? And the answer is no. I've simply moved it from one cash book into another cash book. But my liability towards Mr. Buyer is still exactly the same. So it's simply we credit the one bank account and we debit the other bank account. Okay, so on the 3rd of June, top listed the deposit, that part we've done. Then we invest the deposit, that part we've done. We can move on to the next one. On the 5th of June, the buyer deposits a further 140,000 Rand for costs with a check. Okay, so that means into my trust bank account, we've got 140,000, so that will increase my trust bank with 140,000 Rand. And again, who do I credit? Mr. Buyer. You put the money into my trust, so we'll put it in his account. So, very simple. Comes into the bank, we allocate it to client's ledger. On the 5th of June, deposit for cost with check. Everything there we've done. Now on the 7th of June, the bank lets you know that the check did not clear. So what did we have to do now? Now it's a problem. So did this transaction happen? The answer is no. The money was never received, although I have to account for it the moment I receive the check from the client. So now I've got to go and reverse the effect of this transaction. So how do I do that? On the 7th, I'm going to simply have a credit entry in my business bank, in my trust cash book. So the money came in and the money went out when the check went RD. If we credited the buyer's business account, trust ledger with that transaction, then we simply go and debit his account with the amount that the check went RTDY. Okay, so basically all that it is it's exactly the same as what we account for the check received. The moment it goes RD, then we simply put the whole transaction in reverse. So that's actually very simple to do. Then on the 9th of June, the buyer pays the costs into your trust account with an EFT. Right. So now he simply goes and says, okay, the check bounced, so here's the money back. So my cash book will again increase with 140,000, and I will credit my buyer. I have a liability towards you for this 140,000. So the EFT and the check looks exactly the same. Debit your bank, credit the client's trust ledger. Okay, then on the 20th of June, you pay transfer duty of 100,000 Rand. So will that be a trust or a business transaction? That is definitely a trust transaction. We've got the money in the bank, so we can transfer from the client's ledger the 100,000 because he has paid the costs in. Now in practice, we get some interesting stuff that the conveyancing guys do. Now the question is, if you want to push this transaction through quicker, can you do this payment before you've got the costs on file? The answer is yes, you can. If you want to go and pay your client's transfer duty earlier to try and push the transaction through, you are allowed to do that. But then that goes out of your business bank account. That's your risk. If the client then never pays the money to you or the transaction never goes through, that's your loss. So you can't pay this transfer duty if you do not have the money on the client's trust already. But in this case, they have paid the cost. He does have 140K in the trust ledger for costs. So to pay transfer duty, will that increase or decrease my bank account? Answer is it will decrease. So my trust bank will decrease by 100,000 Rand. Now we get it. So many guys that now go and open up a ledger account called SARS, and they allocate that debit to the SARS account. That's not correct, because now you've got a T account with a debit balance of 100,000, which means SARS will in future pay you 100,000 Rand, which is definitely not correct. What has happened is, because I've paid this money to SARS, my liability towards Mr. Buyer in trust has decreased. My liability towards him is currently 140,000, but now, after I've paid the transfer duty, I simply decrease that liability to show I now have less money in trust on your behalf. Okay, so that one's done. That's relatively simple. Now, on the 5th of June, occupational rent accrues to the seller and you pay it out to him. Right, so what does that mean? That means that Mr. Buyer has now taken residence in the house, but he needs to pay occupational rent to Mr. Seller. Now, what does that mean? That means of his money that he's got in my trust account, I must move a portion and take it out of his trust funds and put it into Mr. Seller's trust funds to show that Mr. Seller now has a credit of 10,000 Rand. So let's do that. That's relatively simple. So we'll say 10,000 Rand. I now have a liability towards Mr. Seller for 10,000 Rand, and that liability comes from Mr. Buyer's trust money. Can we do that? Yes, we can, because we've got 140 in trust. We've utilized 100K, so it means we've still got 40K in trust. So Mr. Buyer says, take 10 of that and use it for Mr. Seller. Now, is that a cash flow transaction? When I move it from Mr. Buyer to Mr. Seller, do I pay it out of my trust and back into my trust? The answer is no. It's the money is already in my trust. I simply move it from Mr. Buyer to Mr. Seller. Now, what do we know? If we've got a transaction which does not have a cash flow, it's a non-cash flow transaction, then we have to do a journal. So to do a journal, we simply go and duplicate what we've done in the ledgers. So we said we debited Mr. Buyer's trust with 10K, and we credited Mr. Seller's trust with 10K. It's very simple. Okay, so now let's just go back to the data and read through that again. It says on the 15th of June, occupational rent of 10,000 accrues to the seller. Okay, so that part we've done. We've taken it out the buyer, we've allocated it to the seller. And then it says, and you pay it out to him. So that step we haven't done. That we need to go and do now. So if we physically pay it out to the guys, will we have a cash flow transaction? And the answer is yes. Will my trust cash book increase or decrease? It will decrease to the value of 10,000 Rand, because that's the occupational rent. Now, what do we debit? do we debit Mr. Buyer over there? The answer is no. We've already taken the money to Mr. Buyer and said, but this money is actually yours, Mr. Seller. But now after I've paid it to him, does he still have that money in trust? No. So the answer is I'm going to credit my trust cash book and I'm going to debit Mr. Seller's trust. Now, 10 in, 10 out. I don't owe you anything. I've paid you out. Right. So very careful to read when it's a cash transaction and when not. If it accrues, then it means it's journal entries. If it has the word pay or settle or something like that, then it means you physically pay it out. Now, on the 28th of June, the property registers and the following transactions occur. A guarantee of 1.7 million pays out into the trust account. Okay, so is that a cash flow transaction? Yes, definitely. So trust or business, trust. Will it increase if the guarantee pays out? Will it increase or decrease my trust? It will increase my trust for 1.7 million rand. And whose money is that? That guarantee pays out on behalf of Mr. Buyer, 1.7 million rand. Right. Now, what happens at this point? At this point, we now have to show that this money is no longer Mr. Buyer's. This money is now Mr. Seller's. So, what do I have in trust for him? We've got 140k, which we've paid with transfer duty. We've paid the occupational rent, but remember that 140k is for costs. So our fee for doing this transfer must still come off. Okay, so I'm not going to touch that. We're only going to move the capital that he has to Mr. Seller's account. So how much has he paid? 300,000 plus 1.7 million. So that means 2 million rand. I'm going to take out of his ledger. $2 million must go out of his ledger, and we now show Mr. Seller, you now have 2 million rand in your ledger. Okay, because the transfer price was 2 million rand. But remember, that's not necessarily the amount that it's not a guarantee that it's your purchase price that gets a journal from there to there. It's whatever he has paid towards the purchase price. And that could actually differ. So whatever he's got left in his trust, less the fee, we move to Mr. Seller's account. Now again, was this a cash flow transaction? Did I pay the 2 million into my trust or out of my trust back into my trust? No, it's simply a journal entry. So to do a journal, it's a non-cash. So we debited Mr. Buyer. We said we're taking 2 million out of your account. And Mr. Seller, we put in 2 million in your account. So the moment the guarantees and all of that pay out, remember to do the transaction between the seller, the buyer, and the seller. Right. Now it says interest of 2,500 rand accrues to the investment and you withdraw. Okay, so that means on this amount that I've invested, we've now earned 2,500 rand interest. So my 300,000 is now 2,500 rand more. But now, very important, remember, there's a rule with the LPC that says of your interest on your Section 86 investments, 5% must go to the LPC and 95% can go to the client. So how will I transact for this account? So 2,500 is a debit, so I need a credit. So we're saying you can get the credit because it's your money that we invested, but only 95% of that. Where does the difference go? The difference goes to the Legal Practice Council. So we're going to say 5% of that . 125 rand goes to the LPC. So let's just see, does that balance? Yes. So we've accounted for the full 2.5. And that, so 2375 goes to client, 125 goes to LPC. Now, on most banking systems, this will be set up to pay out automatically. So in our case, let's accept it works like that. So immediately as the interest accrues, it will pay out 125 Rand to the LPC. Now I go and I debit my LPC account to show that we owe you 125, we paid you 125. Okay, and now we can withdraw the balance of this investment. So how much do we withdraw? Oh, sorry. So to withdraw the investment, how much do we have? We've got 300,000 plus 2,500 less 125. So 302,375 gets withdrawn. Does that affect my liability towards Mr. Buyer? No, it's his money that is there. So it simply goes back into, so I take it out of the investment and I put it back into my trust account. Okay, so let's just see, interest of 2,500 includes in the investment and we withdraw. So by implication, we do the 95 and the 5% split, and whatever was left, we put back in our trust. Okay, now we pay a estate agent's commission of 80,000 Rand. Is that a business expense or a trust expense? The answer is it's not a business expense. It's not, I don't have to pay the estate agent. That must come from trust. So I will pay the estate agent. That will decrease my trust cash book. Who do I debit this from? Who normally pays for estate agent fees? The answer is the seller. So I'm going to say, yes, you've now got 2 bar in the bank there, but I'm going to decrease that by 80K because I paid the estate agent on your behalf. So very simple, credit my cash book and debit the client's ledger. Now, my fee is 30,000 Rand. Okay, now, what do you know with a fee? Is a fee a trust transaction or a business transaction? The answer is it's always a business transaction. So on the business side, I now need to go and reflect this fee. So who pays it? Mr. Buyer has to pay my fee. How much does he owe me? He owes me the inclusive amount. So if we go to the data sheet, your fee is 30,000 Rand inclusive of VAT. So that means I'm going to debit his account with 30,000 Rand to show you owe me 30K. So how much of that is my fee? My fee is the 30,000 Rand ex VAT. So divide by 1.15. So it's at 26,086 Rand. Now, what's the difference between the two? VAT. This is money that I'm getting in. So for money that I'm getting in, we have to pay SARS VAT. So that means we have to create a VAT liability over there, where we say equals, it's my inclusive amount less my exclusive amount there. So SARS will pay you 3,913 Rand for this transaction. Okay, remember this is not yet the trust to business transfer. This is merely raising the fee. So what does that mean? That means I've got to go and do my journal. So what did we do? We debited what? Mr. Buyer business. What did we credit? We credited professional. 1.15. So it's that amount there. And we credited VAT control with 30,000 Rand less the fee portion with the 3,913. Right, and then we just add a little description to say conveyance, you know. Okay, for some reason my Excel is just hanging for a second. Okay, so conveyancing fee. Okay, and that's our description. So this is to raise the fee for the conveyancing transaction. It's not yet transferring it to business. We're only raising the fee to say that is the value of my fee. Then in the next step, it says transfer to business, pay out Mr. Buyer and Mr. Seller. So let's first do the transfer to business. So we remember transfer to business has two steps. A value step where we say Mr. Buyer, we're going to set off. So let's first go to the business. On the business, it says you owe me 30,000 Rand. So I'm going to, from your trust account, settle that. So the credit goes to the business ledger, which means the debit has to go to trust. Okay. Remember, this is a journal entry because it's a journal between his trust ledger and his business ledger. So we've got to do that where we say debit Mr. Buyer trust 30,000 and we credited Mr. Buyer's business. So that's step one, as we say you no longer have that money in trust, and in business you now no longer owe us this money. We raised the fee and you paid it from your trust funds. And then we've got to do the step where we go into our internet bank and we say let's take 30k out of my business, out of my trust bank, so it will decrease my trust cash book, and we will enter it into my business cash book as Rand. Right, so now we've done the first part where it says transfer to business. Okay, now we've got to do the part where we say pay out Mr. Buyer and Mr. Seller. So firstly, we've got to find out, well, how much do they actually have left? So let's just say if we add the trust side there on Mr. Buyer and we add this, then we can say, so how much do we have to pay you out? We've got to pay you out whatever you have less what we've paid out on your behalf. Oops, okay. So the answer is pretty much going to be 2375. What is the 2375? The 2375 is the interest that Mr. Buyer earned on his investment. Okay, so to get this to balance down to 0, I need a debit entry there. How are we going to pay this to him? We're going to pay this out of our normal bank. So our bank account, we're going to credit 2375 and debit side of the transaction will be Mr. Buyer's trust account. Okay, so that now balances. We don't owe him anything. He doesn't owe us. Mr. Seller, let's see what goes in his side. So he's got 2,010,000 Rand there, and we've paid out 90k. So if we say we're going to pay you 2,010,000 less 10,000 less 80,000. So we owe you 1920. So we're going to again pay that from our trust 1920,123. Okay, so very simple. You check what he's got left on as a credit, and you enter a bank transaction to take that credit out. And after you've done that, just run through, just summarize the accounts again. Just make sure you balance so we don't owe him anything. Okay, so if we go back to our data, you transfer to business, we pay out the buyer, we pay out the seller. So we've taken our fees, we've accrued for the VAT on it, we've shown the value of the work that we've done, we've paid out the buyer whatever we owe him, and we've paid out the seller his balance of purchase price. Right, and then lastly, on 30 June 2000, you settle SARS. So this means we are now going to settle SARS for our VAT liability. Now again, now we've got to see, we say that we owe you for the fees that we've done, 10,888, and you're going to give us back all the expenses that we paid, and our agent's allowance. So we've got 10,888 there, that amount there as a debit. So our liability towards SARS is 3150. So I'm going to pay that from my business bank account. If I pay SARS, will that increase or decrease? Answer is decrease 50 and 31. Into that, you will now see that my VAT control is also 0. I don't owe SARS any monies. Okay, so this lecture, although it is very simple and very basic versions of transactions, is very important. So if there's anything that you don't understand at this point, I would very strongly suggest that you just have a read through the lecture again. So let me just stop the sharing. There we go. Okay, so at this point, if there's anything that you're unsure about this lecture, I would definitely go and have a read through or watch this again to make sure that you understand all the debits and the credits, because the lectures, basically all the lectures from here onwards, will be based upon these ledgers. So it is very, very important that you understand this. Right, next lectures to follow shortly. Have a good day.